Poverty is the accumulation of poorly used hours, an impactful and unfortunately true phrase about the reality of many people living with needs, lack of opportunities and lack of money, investing their valuable time in jobs with miserable incomes, with whom they survive day after day, believing that wealth is a matter of luck or impossible to achieve. If you would like to know how to achieve financial success, this video is for you. Today we will look at the 5 financial intelligences you must develop to generate money and wealth. Are you ready? Let's get started. Financial intelligence is the part of our intellect that we use to solve financial problems, and financial IQ is the measure of that intellect. Having an exceptional intellectual intelligence is no guarantee to create wealth. People with average intelligence can get better yields if they develop their financial intelligence. There are 5 types of financial intelligences that you must develop to achieve wealth. They are: produce more money, protect your money, leverage your money, increase your financial information, and increase your financial intelligence. Producing more money involves increasing your income. Identify profitable opportunities and offer solutions to solve people's problems. Become an expert in your field and increase your income. Protecting your money is as important as earning it. Don't lose your wealth for lack of care. Ensure that your assets are protected and that your expenses do not end with them. Leveraging your money involves using your resources strategically for greater benefits. Invest in assets that generate income and don't just depend on your time and presence. Increasing your financial information is critical to making smart decisions about your money. Learn about taxation, taxes, and other financial issues to make the most of your money. To increase your financial intelligence is to develop your ability to solve financial problems. Learn to deal with financial challenges and find creative solutions to achieve your financial goals. Developing these 5 financial intelligences is essential to improving your relationship with money and ensuring that it works in your favor. Don't just save and reduce spending, but increase your income and protect your wealth. With financial intelligence, you can achieve financial freedom and create the life you want. If that's not the case, it won't help to increase your earnings if, at the same time, you keep increasing your spending. Be sure to protect your money from the threats that will arise around you. For example, the more money you have, the more the bank will offer its financial products, such as larger credit cards, mortgages, and loans for vehicles. This is not a coincidence, because the bank's business is to lend money to those who do not need it and can pay back, earning interest from it. When you have more money, government agencies will start auditing your financial movements further and will apply higher tax rates. Be careful with close people, family or friends who, knowing that you have money, appear as magic and approach you to solve your financial life. Or someone will come along offering $1 million business. If this sounds familiar, call them financial predators and be very careful, as they will try to strip you of your money. There is no point in all the effort you have made to earn it if you lose it in their hands. So be prepared before proceeding to wealth. If this knowledge is being useful to you, I invite you to like and subscribe to receive more content. Now, let's keep forcing your money. We explained the importance of planning your spending and having a budget on previous videos. It is important to track your earnings and expenses according to your established financial goals. However, when drawing up your budget, you may notice that you are missing money to meet your expenses, which is likely to happen to most people. In this case, they resort to debt or the use of credit cards, which can lead to even more difficult financial problems to solve due to the high interest rates incurred. If you are in this situation and lack money, before even thinking about investing or saving, you should pay your debts and reduce your unnecessary expenses. After that, to improve your budget and have surplus money, look for new ways to get additional income that allow you to save or invest. When you have a budget with a surplus, prioritize saving, that is, pay yourself first and only then allocate what is left for your expenses. A budget with surplus will allow you to allocate your savings to have 3 to 6 months of your income as an emergency reserve, and only after that start looking for investment alternatives to increase the assets that provide you with passive income, so depending less and less on a salary or a job. Leveraging your money means doing more with less, getting more money by investing as little as possible. This intelligence is the one that will most impact your financial life and significantly increase your income and results. Many people find it necessary to have a lot of money for this. However, there are many ways to leverage to generate more money. For example, with bank money or other people's time. In real estate business, leverage with banks is very common, because you only need to have 10% or less of the value of a property to acquire it and be able to generate income by renting it or selling it. For example, millionaires leverage other people's time by hiring them to take care of their homes, run their businesses, leaving them free time to continue generating money. They are not distracted by activities that do not add value. Delegate all these activities and focus their time on everything that brings them greater benefits. They also leverage their business with loans from financial institutions at very low interest rates to use them in their financial and business investments. It is known that debt generates benefits, although it seems incredible. Therefore, it is often more convenient to use credit than the company's own money, because it is less costly and more profitable. But one should be careful not to get too indebted, not to affect the level of risk and the increase in credit rates. Increasing your financial information is essential. People think that people's wealth is in their money. However, their main wealth is in their ability to generate it and in their knowledge. Therefore, you need to be informed and know the business or investment in which you will invest. Otherwise, it is very risky to invest, for example, in the stock exchange, in real estate, or in any other enterprise without being aware of these matters, as you can lose your money easily. Before handing over your money to financial experts, make sure you learn and develop your own financial intelligence. Learn about what you are going to invest. Practice with discipline, because there are no shortcuts or quick paths. Today, we are in the information age and, for better or worse, it is within everyone's reach. So it is important, if you want to be responsible with your money, to know the difference between opinions and facts. In this sea of information, internet and social networks, you must develop your critical ability to find and educate yourself with correct information that allows you to make better financial and investment decisions based on facts, not opinions. How often do we meet people who, guided by false investment gurus, lose all their money? For example, there is a strategy in investments used by unscrupulous people called pump and dump, which consists of buying cheap and inflating the price of a stock, creating false expectations of future profit, and selling it at the highest point, leaving unsuspecting and ill-informed investors with large losses and useless assets. Therefore, be well informed, because you will find in the network voices that will offer the holy grail of business, that have found the formula to enrich, and that will generously share it for a modest amount of money. Many people fall into these situations, especially the less informed. For example, if you want to invest in real estate, then you should educate yourself, read about it, attend conferences, train, subscribe to industry magazines, and surround yourself with people who are already in this business. Thus, you can get information about the sector. There is no better teacher than experience, so learn from other people's experience, leverage their knowledge. After learning, evaluate investing gradually, taking calculated risks and without significantly risking your capital. Gain experience in what you want to invest in. As Kiyosaki says, the important thing to make money is not the asset you will invest in, but what you know about this asset. We all deal with money, but unfortunately, how to manage it is not taught in schools. Therefore, we see many people with economic problems, mainly due to lack of financial education. Whether you are an employee, entrepreneur, or investor, you must take care of your money, and for this you must ensure that you develop your financial intelligence. Improving your financial education has never been easier. If you apply all this, the time will come when money will cease to be a concern for you and you will achieve the financial life you desire. Enjoy this video for YouTube to recommend to more people. Also leave some recommended videos. Thanks for your time. Until the next time.